Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are that you're watching this video because you got an email from me telling you that it's up and ready for you. Now, if you're not on my email list, what you need to do is go below this video and click the link to sign up for it. Then every single morning before the opening bell, you'll get an email from me with the top and most important market headlines today you need to know about with my analysis of what's going on, because we are at an awesome juncture in the market, it appears, for the precious metals markets, for gold and silver. On Friday, gold touched a long-term resistance trend line, a resistance zone in the 1880 to 1900 area. It was the high of December, the high of January. And then on Tuesday, there was a dip off that level on what was supposed peace news about Russia and Ukraine. But I don't really think the gold market is moving on that. It's moving more on what always is the underlying factor: inflation, interest rates, currencies. The Russian story, while it's big in Europe and has geopolitical implications, it's just one thing happening in the financial markets. The story, the biggest story, I think that's going to define not just this year, but the rest, the years to come. This is a secular cycle of rising commodity prices and inflation. Commodities have taken off. Obviously, the one everyone pays the most attention to is energy, and oil is above 90, but gold and silver have not taken off yet. And I think they're about to, and that's going to trigger runs in a lot of good mining stocks. And what I want to show you is the most important chart when it comes to gold you need to know about. And then we're going to go through some individual mining stocks, including one that pays an 8% dividend that I think is in a great buying position. So let's get to it and look through things together here. So again, what you see here, simple price of gold, you can see closed today right around 1870, $10 below 1880. It's going to have to, I know it's going to need to take a breakout through that level, probably close above 1900 before the masses have any interest at all, because you can load up a Robinhood account. No, none of the top 100 positions are in gold. All these people are completely asleep. All they care about is trying to play the last fad winners or hope the ARK ETF can come alive. They're listening to Kathy Wood on YouTube, or people who actually mimic her. They're not her, but they use the same phrases and talk of techno babble and all this kind of stuff. I'm not interested in telling you buy Facebook because in 10 years something called the metaverse is going to appear and change the whole world. I'm here to tell you, invest in what you see happening now, which is inflation in gold at this critical juncture. Again, I think we have to be looking at this now to be ready for when the breakout happens. If you're not paying attention, then you'll find out about it when it's substantially higher and everyone is talking about it. And that comes to what is perhaps the most important chart, period, when it comes to gold. And that's a simple ratio. This is the price of gold divided by the S&P 500. Actually, it's the GLD, a gold ETF, divided by SPY, S&P ETF. And when this ratio goes down, what it means is the price of gold is underperforming the stock market. Now, notice since New Year's, the ratio has bounced up. It's gone through the green line, the 200-day moving average. It's also like the gold price itself, right below resistance, you can see on the chart, which is probably the 40 cents level on this chart, which means that it's also close to breaking out. Now, let me put it to you this way. Gold has been outperforming the stock market since New Year's. A breakout will confirm that and accelerate the outperformance of gold relative to the S&P 500. Now, if you want to beat the markets, this doesn't mean if you're a small trader or a hedge fund manager or a billionaire. If you want to beat the markets, the fundamental rule of thumb is you want to be invested in things beating the markets. And if gold breaks this trend line here to confirm what's already been going on for the past 6 weeks, that will get the attention of more serious people, professional money managers, big money folks, and so forth. And you'll see more money shift into gold, out of stocks, out of bonds. And some of that's already, frankly, been happening, but that will become one of the defining stories for quite some time. And this isn't just a short-term trend you see on the chart. This is a trend that's likely to last for quite a long time. Gold is less volatile than the stock market, and I believe actually has more upside from here for, let's say, the next 5 or 6 years, much more. And you're risking about the same thing if you buy gold and silver. You know, the lows of December aren't even 10% away. And I think, you know, the metals prices could easily, gold could easily double, triple, even quadruple in the next 5 or 6 years, which would mean silver can go up even more. But mining stocks tend to go up more than the price of the metal does, because when the metal goes up, their earnings grow, and you can, and their bottom line increases, and they're able to boost their dividends and do things like that. And that takes us to Barrick Gold, up 7.5% today on a blowout earnings report and a dividend boost and a buyback program. I own shares of Barrick Gold, but this is the kind of things that happen in a sector that's starting a bull market. You get more surprises to the upside, unlike what's happened to Facebook, unlike what's happened with Rivian and some of these, and Netflix crashed 20%. Those are the past winners, the FANG winners. That game is now shifting, I think, into new winners. And I think gold at this point is the number one sector from a risk to reward standpoint where it's positioned. I am invested in other things, REITs, energy stocks, other commodities, but the way things are positioned today, February the 16th, this gold and silver, I believe, are the best things. So another key mining stock, which I also own, is Newmont. You can see it's also as a simple short-term resistance support is 60. I believe anyone could buy Newmont and put a stop loss order below 60. You've got a well-defined risk entry point in something that could double, you know, in 12 months once the run gets going. And Newmont pays a 3.42% dividend. Now, another stock that I own, which has been a little bit more depressed than the others because it completed a giant acquisition when it bought Kirkland Lake, is Agnico Eagle. I think this stock, you could draw a trend line connecting the recent highs, and we're sitting right on it too. So I'm going to be interested to see what it does. Another stock I own is Yamana Gold. You can see it's already actually above the November high, above the January high too. So in a sense, it's already breaking out. Now let's step back for a second and let's think about other metals, because there's exciting things happening with copper. Copper is consolidating just like gold is, and there's several giant copper companies that pay beefy dividends. I own them too, and I just want to point them out. One is Rio Tinto, paying a dividend over 8%. So what would you rather get into? Something that's been going up while the stock market has been trading weak this year, and you see, would you rather own this or Facebook? My belief is now is the time to shift out of these fantasy concepts like metaverse or weird things like NFT art, crypto coins, and into things that are into precious metals, in companies that mine metal, real things you could hold in your hand, instead of some company like Facebook saying, well, we're earnings are no longer growing, but we're inventing metaverse. It's going to be available in 10 years. Who knows? We're not going to tell you what the odds are that it's going to really take off, but hey, no, sell Facebook, buy Rio Tinto, sell crypto, buy silver. Simple. That's the play of the year right there. It's not complicated. It's a simple thing to do. And one more stock, and to lead you in the copper complex, which is paying a 5.83% dividend. Bitcoin doesn't pay a dividend because Bitcoin doesn't do anything. It's not a stock. It doesn't represent ownership in a company. It doesn't generate earnings, no profits, nothing. But Southern Copper Corporation is one of the biggest copper companies on the entire planet. Copper is used in this computer. It's used in many things, and it's not going to go away. It's going to be used for as long as people are still using things. So these are the things I'm watching today. Really exciting to see the GLD SPY ratio. That's the #1 indicator in the markets for gold. I'm now watching. This is the first time you see me on YouTube. What you need to do is click the like button. That way YouTube will know, hey, people do like to hear about things other than ARK ETFs, NFTs, crypto coins, and Kathy Wood. They want to hear about some real stuff out there. And then they'll start showing that, because the way the world is now, the vast majority of investors are interested in that. And so that's what YouTube defaults to, and is showing people those videos. And a very small number of people are interested in gold, silver, and the mining stocks, which is good. You want to get in early on something before everyone is interested in it. And if you're new, what you want to do is click the subscribe button. New to me, new to ever see me on YouTube. Click the subscribe button, then click the bell next to it, and then YouTube will send you an alert the very moment the next video I do is up for you to watch. So let's see what happens with the next trading session.